Everybody, Courtney Smith here, and I think that the price of oil could go back on its way to $120 again. Here's why. Number one, the opening of China will increase the demand by at least 1.5 million barrels per day and as many as 4 million barrels per day. And that alone is enough to be very bullish. Number two, profit margins of refiners are going up, will increase the demand for oil. And number three, supply is declining due to cuts in OPEC plus production and Russian production. But the big problem facing the market, that's the bullish story, but the bearish story is the extent of the recession that we're going to see in the West. But let's break this down. The reopening of China is the biggest shock to the oil market since the invasion of Ukraine. The consensus is that they will increase demand by 1.5 million barrels per day, which is enough to get the price of oil to rally $10 to $20 per barrel, which is still a good move. But private trading sources of mine tell me that they think that the demand will get to 4 million barrels per day, and that would get oil back to 120 per barrel for sure. So this one factor is good for maybe $20 or more per barrel more. But another bullish factor just kicked in. And let's take a look at this. So the profit margins of refiners are an important factor in determining the demand for oil. In the final analysis, only refiners demand crude oil. Consumers and businesses never demand oil. We all demand fuel oil or gasoline or jet fuel. We demand the products of oil, but not oil. So the key to the demand for oil is the profit margins of refiners. The best way to see the profit margins is to look at the crack spread, but simply looking at the relationship between the price of gasoline which accounts for the majority of the value of a barrel of crude, to the price of crude gives a good, quick idea of refiner profits. At the high of the market, when we made the high last year, the gasoline started to sell too cheaply to the price of oil. And of course, the refiners pulled back on buying crude, and crude embarked on a major bear market. But that situation changed last week. Gasoline is now selling for a price that gushes profits into the coffers of the refineries. This will spark a run on buying crude oil. Now, it's hard to estimate how bullish that is, but I think that's worth at least $10 a barrel. So that's a big factor as well. The final factor that I'm looking for is the cuts in production from OPEC plus and the decline in sales from Russia. It's estimated that oil production has been cut by about 1 million barrels per day by OPEC plus. Now that's not a new factor, so it's not really a big factor in looking for higher prices down the road because everybody already knows it. But the factor that caused the oil market to stabilize and started to shift to the new bullish fundamentals. So it was important from that perspective. If I stopped right here in this presentation, I would be wildly bullish. And I would look for $120 to $140 a barrel. But the developed world is going into a recession, which will cut demand for oil by at least 1 to 2 million barrels a day, and a severe recession would cut demand by up to 5 million barrels a day. But so far, the market is not focused on that. They're focused on the strength of the US, Indian, and Chinese economies, not a coming recession. Europe and Japan are flatlining, so they don't play into this scenario at all. The strength of the U.S. economy is causing the Federal Reserve Bank to increase interest rates, which is also a bearish factor for oil, but less important than the above factors. So the question, of course, is how do we make money from all this? I'm already long a couple of energy stocks, but I don't have a big position yet. My trading philosophy is always for the market to tell me when to buy. So I want to buy energy stocks and crude oil on signs of strength, such as a break of recent highs. I look to create major operations in the energy market this year, as this is a potential major profit opportunity. The absolute best way, of course, to track my personal energy operations is through the Stock Navigator. It is here that I produce a daily report, the macro report, that details all my analysis of global markets. But more importantly, you see my actual trades that I will be doing to make money in this major opportunity. The service is not cheap, and you actually have to apply to become a member. So click below to find out more information. Back to energy for a second. So I think that what's going to happen is that there's a sequence of events that are going to occur. Right now, they are bullish because of the increased demand, the cut in productions, the new change in the economics of the refining business. That's all bullish. But down the road, if and when the recession hits, then it'll all become bearish. So short term, very, very bullish. Long term, we'll have to see how bad the recession is. A mild, soft landing or no landing would still remain bullish for energy, but a hard landing, I would have to turn to the bear side. We'll talk to you later.